Good afternoon, welcome to GrainTV. My name is Cody. Today is April 2nd here, and we had the markets mixed today with corn trading up 4 3/4 cents, soybeans down 4 1/4, and wheat in Chicago trading up 5.5 cents here on the day. Now this morning we did get 118,000 metric tons sale. That was a reportable sale to unknown destinations for new crop soybeans, so that was very positive. But when we look at the export sales report, which came out before the market opened for the day session, you'll notice that we did have some very disappointing numbers here for soybeans in particular, where corn and wheat both were on the low side of analyst expectations. Corn came out with 406,000 metric tons compared to expectations between 400 and 500,000 metric tons. That was down 7% week over week. When you look at the overall pace here of corn, you'll notice that we've booked 37.4 million metric tons at this time of the year compared to last year, which was right around 41.3. So we are behind last year's pace. In this chart, you'll notice the blue line represents last year's pace, where the green line represents the pace needed to meet USDA expectations this year. And so what we're seeing here is that the pace continues to be ahead of what is needed to meet this year's expectations, but behind last year's pace. But you'll notice these red lines, which are actually the cumulative export sales here on a week-by-week basis. You'll notice here that over the last few weeks, we really haven't had a significant improvement. You'll notice that last year we were continuing to make very strong sales during this time of the year. And really over the last 4 or 5 weeks, we haven't been able to pick up the pace here for corn, and we start to really kind of converge here with that green line, which is the pace needed, taking into account seasonality, to meet USDA expectations. So the bottom line here is the export sales still are good, but unfortunately we're not at the kind of clip or the kind of pace that we need to really be outperforming. That's very different from soybeans. You'll notice soybeans was able to book sales well ahead of last year's pace. It's well ahead of the pace needed to meet USDA expectations. This year there was this week there was very little improvement. We only saw 27,000 metric tons of old crop soybeans sold. We were expecting to see a taper here. Last week we had very large export sales. This week we had very little export sales. It's going to be interesting to see if this is just a blip in the radar here with very weak export sales only once, or whether or not this is going to become a trend here, because when you look at those cumulative export sales, that soybean sales slide here, you'll notice that the blue line, which is last year's sales, right around this time we really started flatlining. And so that's, I think, the critical thing to pay attention to. It's very reasonable to think that right around this time we're going to start seeing a flat line in export sales here for soybeans, simply because South America is coming on in such a big way, such a large crop down there. We did see also an increase in soybean expectations here out of the Buenos Aires Grain Exchange. Bottom line, very large crop coming out of South America, and that's going to have negative impacts on our export sales here moving forward. Let's take a look at wheat here. We are 162,000 metric tons sold. That was really on the lower side of analyst expectations, or I guess right in between, with expectations between 100 to 300,000 metric tons. Now wheat, we did see an improvement, about 58% improvement week over week. So this is good to see. We have seen prices kind of creep higher here. It almost looks like when you look at that daily chart that we're really kind of hammering out a large base here for the wheat market. So it's going to be interesting to see whether or not wheat can continue moving forward. That, of course, is the final topic of today, is the wheat market. It's been really, it was rallying a little bit today. And one of the issues here, of course, is that plains region, that hard red winter wheat region down in the plains that has been very, very dry. And has been experiencing some high temperatures. Take a look at some of the high temperatures here just today. You'll notice there's highs in the 80s and high 70s. When you look at the temperature here next Tuesday, you'll notice that there's highs there in the 90s in areas that have been very, very dry, need precipitation. When you look at the precipitation outlook here for the Plains region, you'll notice it tends to be very dry. In the 8 to 14 day forecast, which is featured here, you'll notice that there is dryness expected in that Plains region here during that time period. So that is very disappointing. Really, in the last 90 days, we've only received about a third of the rain that is typical for this region. So it's dry there. That is causing concern. It seems to be, when you're looking at the fundamentals, there is concern for next year's crop, for wheat supply next year, wheat production. When you look at the chart, it's almost as if we are hammering out a bottom. We've had these rallies. We've tried to break new lows, unable to do so, kind of rallying back up to resistance levels. So when I look at this, I think unless we get a fundamental shift here and start getting moisture in these plains regions, we could start to see continued sideways movement to possibly even break out a little bit to the upside. But of course, fundamentally right now, there still is an ample supply of wheat on the global market, but this kind of concern in the plains, if this continues, this trend continues of dryness and hot weather down there, I think we're in for a situation where we very easily could move higher here for the wheat market. But that, of course, remains to be seen. Other than that, guys, thanks a lot for tuning in. If you have any questions about what we talked about today, please give the office a call. Number is 877-472-4607.